on this. Sugar stocks under some pressure right now. But just a word, tell us if you're hearing anything on metals, anything new in China, because on the equity side, these stocks are really running today.
Well, that's exactly what we have seen for the underlying commodities also. So whether it's copper, which is up 0.5% on LME right now, but the bigger gains really have come in for aluminum. Nearly 1.5% of a surge in the Asian markets onto this one. Even zinc, which really doesn't have very strong fundamentals, is trading on the positive side as well. So as you can see, it's good gains that you are looking at in many of these metal prices. One, you have the dollar index, which is yet again trading slightly in the weaker side. Two, while China did come out and cut those mortgage rates yesterday, but the markets do believe that it's a small and pretty late, but there is conversation yet again in China, and there are various reports that I was reading that there are expectations you could be looking at more measures and more stimulus measures coming in from China, and that is keeping the hopes on the higher side. And then apart from that, with the kind of decline that we saw in many of these metals, there is some short covering that you also are seeing, especially in case of copper, where we have seen nearly 4.5% of gains in the previous week itself. This is going to be yet another year that you are looking at deficit in case of copper, so that has been supportive. In case of aluminum, though, while we have seen some short covering come in for this one, it is about the LME inventories, which are still at a 6-week highs that could continue to put pressure on prices. But today seems like a day where you are looking at short covering, support coming in also from the expectation that China, which has come back from its Lunar New Year holidays, could be looking to buy on ground and could come out with more measures, and that you can see in prices.
Okay, thank you very much for that. That's the story on sugar and metals. Now let's move on